I think the markets have been less aggressively pricing the downside. It's difficult to short the markets. A lot of the hedge funds won't use Binance, for example, because they can't get it through compliance, and a lot of the other products aren't available on the other exchanges. So it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop. I don't know really who they are or what they are. People have been looking at Genesis, Jump, and the other market-making firms. Is it possible? Well, they've all said no, but as we know, that means nothing in this world because everybody says, no, we're all fine. We're just going to have to wait and see. But I am biased towards, if there is another sell-off, you want to start aggressively adding into it because the macro cycle is turning, and I think this is the final phase, the capitulation phase. And I've been around this market since 2013, and I've been through all of these and I've seen all of them, and the sentiment is as shitty as I've ever seen it, for obvious reasons. A lot of people have lost a lot of money being caught in all of these kind of fake crypto, and out of that they tried to paper over the cracks with customer money to hide the issues, because it would have brought down the exchange anyway because of the tie-ups with the FTT token. And then this whole thing gets exposed by CZ, but really the market needed to know this stuff. So that's where we are now, and I know we're gonna have a lot of questions about knock-on effects of that. So I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle, and right on that secular uptrend of whether it's the 2 standard deviations oversold in the log regression channel of Bitcoin, or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see. FTX Alameda failure is on everybody's mind. The contagion does not seem to be contained. What other failures and market adjustments could we expect? How much longer could this take to play out? I have a slightly variant view, but you can't have much confidence. I think most of the bad leverage was taken out in June, and this was the final part that should have happened in June but didn't. What are the knock-on effects? Well, normally if Alameda had gone bust, the knock-on effects would have been Celsius and BlockFi, etc. They already went bust. So we've got the knock-on effects of FTX having bought them and then can't fund them. But I think that was a kind of known failure. So is there somebody bigger here that is yet to get knocked on? Some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. Signature, Silvergate, those two are the main lenders in the system. What I do know is there's a lot of hedge funds trapped in FTX, because FTX was really the avenue for the ability to short markets via the perpetuals. So a lot of hedge funds use them, and they've got that assets trapped, which is a shitty situation for everybody involved. And I don't know how that resolves. I got caught out in MF Global myself. It was very similar. It took a while before we got our money back, but we got a big first tranche back. And then eventually over time, as the administrators and liquidators sorted it out, we got the rest back, but that took years. That's another issue for the hedge fund market. There's no option market unless you can trade offshore. So it's really complicated out there, but let's wait and see. But don't use leverage. If you do, use call options, but you still have a risk the exchange goes under and you might not get paid back, even if you win. So just be careful with this stuff. Don't risk your life on it. And don't use yield unless it's staking yield and you understand you're taking the risk in the underlying protocol. So let's see how much longer it takes to play out. The answer is I don't know. Market could have rallied today, didn't. So, maybe we've got the other leg lower. I think people want lower. I think there's a lot less buyers around right now, again, because a lot of hedge funds have got their positions trapped. I run an asset management business that invests in hedge funds. We had one that got trapped. A few have had some of their balances trapped on FTX. So it doesn't look as systemic as I feared, but I don't know yet. So, but again, it's not that the hedge funds are going to go bust, it's just their capital gets frozen. So it's a bit weird. it's either mainly priced in or nobody can short the market. Who else is left to sell? Most of the people are kind of diamond handers right now. Most people got flushed out in June. So I'm actually not that bearish, but I'm open to the possibility there's more downside. I'm pretty sanguine because my time horizon is much longer term. So I expect machinations like this. I expect 80% drawdowns. I've had them in the past several times. I'm kind of used to it. And remember, once you put it on a log scale, those drawdowns never go to the previous low because we've got an exponential uptrend over time. So, it's really a long-term game. I'm not a short-term trader, so I can't really help with the short-term side of it. I think it's dangerous in an 80 vol market unless you really know what you're doing to be a short-term trader. But to be a long-term trader, these kind of points are really interesting. What will have to happen in order for Bitcoin and Ethereum to basically die? Which is a slightly bizarre question. I don't think they can die. Can interest die over time so you end up with a smaller pool of users? Well, we haven't seen much evidence of that. If I look at the Metcalfe's law models, these networks haven't really grown a lot since 2021, maybe even the end of 2020, and that's to be expected. But for them to die, we need all of Web3 to stop developing and the exponential trend of adoption to entirely stop. And I think that's just highly unlikely. So I just don't see it. So this is the usual dick behavior that you want to get by point scorers on YouTube and Twitter. Is like, I bought call options thinking that the chart pattern of Ethereum following the Bitcoin pattern from the previous cycle might play out. Those call options were 5% of my risk. That bet was wrong. I've made millions of wrong bets in my life, and I will continue to make millions of wrong bets. Over time, I've been a lot more right than I'm wrong. And I got that one wrong. And I explained when I did it that it was in options and I had defined risk. So 20,000 ETH didn't work out. Can it get to 20,000 in the future? Yeah, I'm pretty sure of it. So are you bullish on DeFi after what happened in FTX? Yes, I am. I think DeFi is proven through all of this stress to work. So DeFi, for those of you who aren't aware of the difference, it's the liquidations and the elements are all written into the smart contract. So it happens regardless of humans. And that has worked really well, been really robust. The issue with DeFi is the UX is so shitty. It's beyond anything I've seen before. It's like trying to run something in BASIC on your computer. You have to use bridges, you have to use Uniswap, you have to do this, you have to do that, you have to scratch your ear like this, you have to jump on one foot and sing the national anthem backwards so you can use the protocols. It's a mess. But it will get better, it will get easier, and then we'll see, I think, hopefully we'll see better integrations into things like Ledger, where you can just basically use these things more effectively, and it just becomes a seamless operation, and you know what risk you're taking.